How to tell if the stock market's about to crash. How to tell if when you see something on YouTube, it says stock market crash 2020 or 2021 or 2022, what you can do to check to see if that's actually going to happen. Hey guys, this is RC Peck, and I want to talk about stock market crash, fill in the blank, right? There's so much on YouTube, and what I'm noticing is when someone does the stock market title, 10 more people do it, and it just gets this like echo chamber of everybody thinking the market's going to actually crash. So what I want to do is I want to show you six charts you can look at, and really there's just one. So you look at one chart with 5 supporting charts to tell you, is there one coming? And it's such a great filter. And as much of this video is going to be about anything, it's going to be about a filter. So let's get into the content. Let me jump over to price charts and let me show you exactly what to be looking at to see if in fact a crash is coming. And again, I'm going to show you one chart, and then I'm going to show you 5 other supporting charts that are going to either support or hurt the one chart to look at. So let me jump over there. Okay. So we're just going to start with this one right here. So look at the screen here. What I'm showing you here is the U.S. stock market priced in 20-year U.S. Treasuries. So I'm literally showing you the S&P. I'm using SPY. And it's not priced in dollars. It's literally priced in U.S. Treasury bonds. Now, what you need to know is if this black line is going higher, I'm just going to kind of show you a resistance zone right there. If the black line is going higher, that means the likelihood of a crash is very low. Now, I want to just show you a couple things on this price chart before we go to any other price chart. So notice here in 2018, this price broke up, but it couldn't stay up there. So, right, at the end of 2018, the S&P 500 relative to TLT, which are 20-year U.S. Treasury bonds, you can see the name up here. It tried to break out, but it got pulled back in. And you could see it tried to break out again, and even tried to break out again in the beginning of 2020, but it didn't. So it kept failing to create that stability. But now look what happened over here. So here in 2021, we've got the U.S. stock market as measured by SPY being priced in U.S. government bonds, right? The 20-year Treasury. So SPY divided by TLT. That thing is broken out to new lifetime highs, right? And so that is a sign of stability. When you see stability like that means, when you see stability like this, that means the stock market is way more stable and in a much stronger uptrend than the bond market. And if the stock market is going up really, really strongly relative to the bond market, that means more people are buying stocks, right? Throw the news away, throw the headlines away, throw the tweets away, throw the vlogs and blogs and all of that away, and get to a price chart and be like, look, if people are scared, they're going to go to bonds. If people aren't scared and they're not worried about the future, they're going to stay in the stock market. They're going to buy more. So this black squiggly line going higher and breaking out to new lifetime highs is a sign of stock market stability. You could even take this whole thing and kind of even do that right there, that it was in this sideways trend, this kind of sideways messiness, broke out, couldn't stay down here, came right back up into this, and now it's at new lifetime highs. So the first thing to kind of filter out all of the hype, all the fear, all the noise is to get to a price chart and really say, look, if the market's going to crash, then we're going to start seeing more people get into bonds, right? And as I showed you before, people, right, the stock market relative to the bond market, it couldn't break out of this. It just kept pulling back in. It kept pulling back in. It kept pulling back in. And let's see, right in here is where the market peaked. So that was below that resistance zone. So we are way above that. We're in new lifetime highs. So anyone on YouTube or any blogs or vlogs or anything that are claiming a crash is coming, it's going to be one where no one, and we're talking collectively here, like the people behind the stock market, there's about 700 million people behind them. They're the smartest, richest, maybe I shouldn't say smartest, they're the richest 700 million people on the planet. Okay, so that is one. The other is, if the market's going to crash, then you'd want to see this line falling. Now, this is the stock market priced in gold. In this case, SPY priced in GLD. And this one is not as strong as when the stock market's priced in bonds. But you can see here that the stock market, so if the line is going higher, okay, and breaking out to new highs, then that means the US stock market is strengthening against gold. And that's what we're getting here. It's broken above that resistance and it's moving up. So again, if there was going to be weakness, we'd see it in both the S&P priced in bonds and the S&P priced in gold. The other thing you can do is you can go right to just the indexes. So here's the S&P index divided by the US dollar index. Same idea here, that when people are worried, they go into their local currency or they go into a stable currency. And still, whether you like it or not, with quantitative easing, balance sheet expansion, one of the safest currencies on the planet when the market goes into a correction is the US dollar. And so here you can see right here was the trade wars tweet by Trump. But you can see that the market could not get above that resistance zone. It attempted to get above it. Again, this is just index to index, the S&P 500 index divided by the US dollar index. The S&P was starting to, but it couldn't sustain itself above this trade war, which was really, using kind of the vernacular of people, the risk off. And it came back down. Now, all of these are going to be more supporting factors. The strongest one to look at is SPY divided by TLT. But the thing you can see here is clearly the S&P, SPX divided by USD is clearly at, and it's not just recently at a high, it's very much at new lifetime highs. There's a couple other ones I want to show you that support the first one. The next one is if people are getting worried, they're going to put more of their money. Oops, hold on here. Oh, here it is. If people are going to get worried and they have to stay in the stock market, they're going to move to the safest part of the stock market. And typically or historically, the safest part is staples, things you have to buy, even if the economy is doing poorly. And as you can see here, SPY divided by XLP, which is basically the US stock market divided or priced in staples, the sector staples. And you can see when the black line, or I'll tell you when the black line is going higher, that means the overall market is outperforming staples. These are filters. These are literally what I'm showing you are visual filters that you can go to. So if you read something about a crash or a crash in 2021, you can go here. Before I go on to the last two, and I have two more to show you, I want to point something out that I think people are forgetting. And let me just do it right here. We just had a crash. Like, we just had a crash. It's right here. It's like we just had a crash. We just had a crash. You don't get a crash after you get a crash. Like, that doesn't happen. You may get a recession after a recession, but we just had a crash. And so people calling for another crash, they don't know market history. Right? We didn't have a crash after 08. 08 was a 58% crash over 18 months. 2000 was a 50% crash over 30 months. Right? The difference between those two crashes was 8 years. Guys, it hasn't even been a full year since the last crash. And that crash was 34% in 30 days, which is equivalent to 58% in 18 months. So just think about that, a 34% fall. Let's get away from the word crash. A 34% fall in 30 days, never happened before, is the equivalent of a 58% fall in 18 months, or a 50% fall in 30 months. So the fall was faster over a shorter period of time, and it scared the hell out of people. And we've turned around. I've got to, I can't say this enough. We just had a crash or a fall or a correction or a drawdown or whatever you want to use. So all of these like crash watchers, no. I mean, could it happen? Of course. Has it ever happened before? No. Well, lots of things never happen. Okay, but like there was already a clean out. There are already tens of millions of people hanging out in cash because they think any day now there's going to be another one. We just had a crash. It hasn't even been a year since it started, which was February 19th. It ended on March 23rd. I'm recording this on the 15th. We're not even a year from the start of the last one, and people all over the platforms are saying another one's coming. So I got two more things I want to show you. But I also want to point out there's nothing wrong with the stock market falling. They fall. Every 7 years, we get a 20% correction. 50% falls are part of the market. 60% falls are part of the market. So to expect the market to stop acting like it's not quite like the seasons, because the seasons are pretty much like 3 months, like summer's 3 months, then fall's 3 months, then winter's 3 months, and spring's 3 months. And so there's this general cycle to weather. It's not like that with the stock market, right? We can be in an 18-year bull market or a 24-year bull market. And notice that those crashes or corrections, they're a fraction of that time. And a 34% fall in 30 calendar days or 20 trading days, that's a pretty real correction. The next shortest one ever was 1987, and that was 33% over 6 weeks. Now, 23 of the 33% happened in one day, but in total, it was a 33% fall over a total of 6 weeks. So the shorter they are, the harder they fall. The longer they are, the slower or the longer they take to get going. So I just want to point out we already had one, and they don't come 10 months later or 12 months later. They happen years and years and years later, 5 years, 6 years, 7 years later, 10 years later. I know that goes into the face of everyone saying the market's going to crash, the market has to crash. The PE ratio, the whatever ratio, the EV to EBITDA ratio, whatever Buffett ratio is getting dragged out of the corner. No, the market can go up for all the 2020s. Okay, and then two more symbols, two more filters to support the SPY divided by TLT. The other one too is if you have to stay in the stock market, the other thing people are going to be looking at is, well, I'm going to need dividends. I got to be in dividends. And you can notice here that the market broke out to new lifetime highs when priced in dividend stocks. So that clearly even said in 2020, that one was saying, no, market's breaking out relative to dividend stocks. So that was actually pretty pro. Last one here, guys, SPY divided by XLU. All right. What I love about this one, it's in this case, it's the slowest to break out to new lifetime highs. So what we're looking at here is the S&P 500 priced in the utility sector. Okay. Same thing you can see here. Tried to break above here. But notice where the S&P was relative to utilities. Actually, let me just annotate this down here. So this was the COVID crash right down here. And look at how the S&P was definitely weakening relative to utilities coming in here. So it was giving some signs that there was some weakness going on. Okay. So when the word crash gets dragged out and these words and these terms get swirled around through all these social platforms, the way you can tell there's just one chart. Just pull up a relative price chart of the S&P 500 priced in 20-year U.S. Treasuries, and I'll just bring it up right here. I'll do it one more time here, TLT. So we got it here. So there it is right here. And that breaking out to new lifetime highs is an absolute sign of equity stability. And the thing is, this is all price. This is human behavior. This is the collective behavior of 700 million people. This is the filter. And the filter I think most people are looking for. They're looking for that filter. They're looking to figure out how to bring that filter into their life. And understanding how to read price charts is that filter, because you're doing it visually and the brain wants to see things visually. Hey guys, if you like this, you're going to love the other videos I have for you, and please go ahead and hit the like button. Thanks for being in my world, and I will see you on the next video. Okay, bye.